Amazing. Thanks so much for joining us. To all of you, we're really excited to have you here. I'm Jaou, I'm the head of business and operations at Huma, and I'm joined by an incredible panel. I think it couldn't be a better panel to talk about PayFi and global commerce, so I'll give you the chance to each introduce yourself, and then we'll get started.
Hey everyone, great to be here. Thanks for having me. I'm Antonio, I'm in the go-to-market team at Bridge.
Hey everyone, I'm Atikh. I'm one of the founders of a company called Acctual. What Acctual does is we help businesses pay and get paid in whatever they prefer, whether that be a stablecoin, a fiat currency direct to their bank or wallet, and let their counterparty pay in whatever is easiest for them. We're built on top of the best orchestration tools like Bridge to bring together the magic of the fiat and stable world and try to layer on the more mission critical workflow of accounts payable and receivables. Prior to this, I was actually at Stripe, so we've got a pretty stripey group up here.
And I'm the one not Stripe person. I'm Bryce. I work for Nuvei. We're a global acquirer. I'm focused on our Americas region and then our global stablecoin strategy.
Cool. Hi, everyone. I'm Jen. I'm actually at Stripe currently today. I'm on the Stripe crypto team, and I lead our stablecoin financial accounts and stablecoin payments products.
Amazing. Welcome to all of you. So when we think about global commerce, one thing that we estimate is the losses that come from the inefficiencies of payments. Payments are really key to global commerce. And we estimate that roughly $1 trillion is lost every year to transactions that are wrongly not approved, to certain kinds of undue fees, to kind of like other forms of mistakes and inefficiencies. But I think one thing that we don't know how to estimate is the opportunity cost of all of the transactions that actually do not happen because a merchant in one part of the world has a customer in another part of the world, but then the payment solutions that are available are just too costly, too inefficient, too complex to make this transaction viable. And so a lot of us here in the room believe that PayFi and all of the, I'd say, on-chain solution toolkit can help alleviate some of these issues. But I'm really curious to know which one of the features of these PayFi tools for you has the superpower to make a difference. So some people care about decentralization and believe it's all about decentralization. Could be about transparency, maybe more about the instant settlement, the cost. So I'd like to kind of hear from each of you, what do you think is the key superpower of the PayFi toolkit that will enable us to transform global commerce? Atikh, you can get us started.
Sure. I think for us, we like to think a lot about coordination and how really stable coins are a fresh kind of take or a new opportunity to achieve that coordination between these two parties. Because ultimately what we're trying to achieve in any kind of cross-border payment is just, I want to pay you in this thing and you're going to get this thing. Are we okay with this? Are we going to be able to get this deal done? And really, prior to that, we had Swift, cards and they work, right? But obviously, usually you're kind of having to sacrifice on either cost or speed or sometimes both, or maybe they don't work at all in some cases. And so ultimately, the ways that we're seeing that coordination play out today, it's not that, one business is going to take a stablecoin and the other is going to, pay in a stablecoin. It's that, we can sometimes use it in the sandwich example that we all hear about, where Nigerian importer pays in Naira, they go to Yellow Card swaps that for a stable and turns that stable into yuan for the importer that they're buying from, which is kind of the more in between, let's just bypass Swift and get this payment complete. A little more of what we see is more of that open-faced sandwich where one party wants to sort of receive a stable coin, but the other party wants to pay in more of a vanilla fiat currency. So, we see this with Nigerian freelancer just did some work for a real estate company marketing, and they're like in Maine, boomer company. They want to do an ACH. And then you kind of have the other side of that where maybe it's a Brazilian, importer and, they are out of the Real and they're in USDT and they want to pay their importer in the US. And so they'll leverage USDT to get that into dollars to pay that exporter. So I guess just a few different flavors, but ultimately how do we use them in a way to create coordination?
Amazing. Jen, do you want to take it next? What's the superpower for you?
Yeah, I mean, I feel like all of those pieces, I think, are actually second to, I think, is actually the main important thing. And I think the one that we're really excited about is Stripe, which is essentially that stablecoins enable money movement to be global by default. So Stripe has always been in the business of money movement, right? Like the idea of solving payments processing for startups was kind of how Stripe started, because that was the main like problem to be solved at the time. But now I think the problems to be solved has changed and developed from your SMBs all the way up to your enterprises, where when our teams go out and talk to these merchants, you actually learn more and more even small businesses want to go more global more quickly. And they have a lot of problems really kind of grokking how to do that. There's like hundreds of local payment methods. And if you're just like a startup starting in whatever country you're starting from, it's really hard to kind of figure out how to optimize for what your customers are going to be looking for and really meet your customers where they are. So I think when we think about our products, the number one thing that stablecoins help us enable is basically more to be able to go more global more easily, so that our merchants can actually just reach their customers where they are. And I think that's a key learning for when you actually talk to merchants that really don't know anything about crypto or stablecoins, and you kind of actually have to talk about how stablecoins are not a Bitcoin. Like that's sometimes a conversation that happens. But for them, they really get, hey, how can I increase my TAM? And a really great way to increase my TAM is to go global. How can I go more global more easily? So I think that's where, for example, last year we announced that we were finally back in stablecoin payment space. So we announced that around this time last year, and then we actually launched the product in October. And in the first 24 hours, the merchants that had stablecoin payments turned on saw payments come in from 70 plus countries. And then last I looked, I think it's like a rolling 90-day metric window or something. It's like 123 countries across all of them. So I think that global piece is really the key thing for us.
Amazing. You want to go next, Antonio?
Sure. Yeah. I think, from our perspective at Bridge, I think the key word is access. I think that's what we're just seeing on the ground is whether you are someone living in Argentina looking to save money in a currency that's not inflating away, or a Nigerian, freelancer, or just professional that wants to earn a living and earn their paychecks in dollars, or a business that wants to make payments to their suppliers across the world. Like for us, that's what we're seeing, just like an immense demand to just have access to what we kind of take for granted a little bit here in the US, right? A lot of us here just kind of won the geographical lottery, right? And we, we have access to the dollars in a stable currency, in opportunities. And so a lot of the activity that we see at Bridge is in places like Latin America, like Africa, like Southeast Asia, where folks are just looking to get access to just baseline stability, right, in financial services. So for us, the borderless nature of it is a huge kind of piece of it. And we're seeing now the borders are kind of just going away, and it allows entrepreneurs to, from the ground up, like in a matter of days, build global neobanks, right, that allow people to have access to this from day one. So that's a big piece of what we're seeing at Bridge.
Amazing. Thank you so much. Bryce, you want to go next?
Yeah, I think as we start to replace this correspondent banking network with more real-time rails, we'll start to see a convergence of the payment industry with capital markets, which will unlock a lot of new opportunities globally with the tokenization of traditional financial products, enabling corporate entities to earn interest or yield on their idle working capital. And I think that will create new opportunities, not just in developed markets, but emerging markets as well, and could potentially offset a lot of the costs associated with payment processing, whether that be the card network fees or just a traditional payment fee. And now this capital that's moving through a business, besides just paying for the goods or services they're providing, can also be an investment vehicle in capital markets, where today with the correspondent banking systems, you're going through two different types of settlement networks, the payment network and then the asset or equities market settlement network. And there's just not liquidity when you have all those time delays. And if you take that at a macro scale globally, now if you're a multinational corporation, you have funds in multiple geos of the world, you can keep some funds there instead of repatriating it all back to developed nations and actually invest in local treasury notes for that local government as an example, which earns you money, safeguards your funds there to do local payments while still having that flexibility to move your funds globally. I'm really excited for that. I think we'll see it in the next year or so.
Amazing. Thank you all for your responses. I really resonated with what you were saying, Jen, on the global markets and the fact that all of a sudden with these new products, you have an ability to kind of like open up. I mean, you were talking about access also, Antonio, open up the access globally. And I think we live in a world that's like more and more digital. A lot of the commerce is digital, and digital commerce is inherently global, right? Like the internet is this like incredible platform that we've all been exploring for the past 20 years and kind of like, you know, expanded our views of the world, expanded our access in so many ways, but money has remained mostly a local, I'd say, infrastructure and a local product. And so I think what you all are highlighting is how global commerce will become even more seamlessly global when money is inherently, from a technology perspective, global as well. One thing as well that I think is piggybacking on this, I think a lot about the world we live in, right? We are going through trade wars. There is a lot of, like, I'd say, tension around global commerce. There is a lack of trust more and more in some of the central, I'd say, institutions that have been orchestrating payments and otherwise. And so in payments, one key thing is trust. And so with the new technologies that we're bringing in, how can we make sure that we maintain a high level of trust so that we have adoption? So I'll go back to you, Bryce, with that question. Nuvei is one of the largest payment companies, trusted by a lot of other payment infrastructure providers and merchants. What does it mean to introduce crypto products to companies that, you know, first and foremost value trust when we talk about payments?
Yeah, so I think stablecoins specifically and blockchain have worked really well with a lot of our merchants because it fits their use cases. We work with a lot of airlines, we work with a lot of remittance companies, ones that are global by nature just because of the breadth of alternative payment methods that we have. But I think on the trust aspect, I think Chuck on the last panel mentioned like working with Visa and MasterCard and Swift as these messaging layers, right? Like you don't need to replace these trusted entities. They do what they do very well. It's replacing that underlying infrastructure. Like I just mentioned earlier, that correspondent banking network, and then creating new alternatives for those banks to still participate. But you have that brand trust and ways for merchants to get stablecoins, but the consumer doesn't need to necessarily know. And that's what we've been doing for it's 2 or 3 years now. Nuvei was the first acquirer to settle stablecoins or receive stablecoins from Visa and MasterCard, starting in the EU, and we're expanding that to Australia, Colombia, Mexico in the next month or so. But that enables merchants to feel comfortable. They're still technically accepting Visa and MasterCard transactions, and then they're getting stablecoins from us, so they know they're good funds. They don't have to worry about AML and compliance and risk and sanctions as a stepping stone to them in the future, you know, enabling native blockchain payments if they want. And they are already having them, so they can then use them in payroll, or they can use them for vendor payments, or have their consumers pay them. And so I think piggybacking off existing trusted entities helps the merchants be more comfortable, traditional merchants.
I love that answer. I think when we come up with such new technologies, we sometimes get obsessed with replacing everything that's ever been existing. And I think what you're saying is absolutely true. We can take what's been working in the previous, let's say, incumbent system, and a lot of it is the trust and kind of like some of the compliance processes that exist, and then change the underlying infrastructure to make it more efficient. I love that. And I think talking about replacing the infrastructure, so that is definitely needed. And we see a lot of I'd say VC capital coming into this space. It's been picking up a lot more of these events as well, such as PayFi Summit, more and more hype. And I think Atikh, your company, has raised recently a seed round, a very successful one, so congratulations. And I'm wondering, if you could share with us, what is the pain point that you have identified and that you think only a startup can come and solve, as opposed to kind of an incumbent player? Can you talk a bit more about what you're building at Acctual?
Yeah, for sure. I mean, the first pain point is obviously, the payment itself. And what we're seeing globally is just that now we're having more divergence in what people want to pay and what they want to receive. And ultimately, stablecoins kind of, making that a little more challenging. And so how do we sort of meet those growing needs globally where folks can still pay and receive how they want? But in that, I think there's a lot of magic in the payment flow itself, but kind of going back to this idea of not replacing systems, businesses still run a certain way. They've got finance teams, operations, reconciliation. And so, we talk a lot about how we solve kind of around payment flexibility and preference, but the more kind of mission critical layer that we solve for is around kind of the process and workflow for a lot of these businesses. A lot of times it's more than just a payment. It's an invoice payment. It's tying that invoice to a particular vendor or customer, associating it with a particular revenue line or expense line, and have everything from the downstream accounting really set or accounted for. No pun intended. And in some cases, right, the invoice itself has to be recorded with certain government entities before it can even be paid. And so, at the same time that we can help businesses get paid faster, get to keep more of their hard-earned money, how do we at the same time make it so that they don't have to change how they work? And I think that's what ultimately got a lot of kind of VCs excited as we were raising and building what we were building. And we talked a lot about this idea that what we're building now is sort of like a global build.com. For a really long time, SMBs in the US is who build.com served. And, by design, that's kind of hard to build a system that can serve all those businesses given, all the different types of rails that they would need to support. But now, we can be global by default and serve a lot more businesses globally. I mean, now we've got users in over 100 countries. And at the same time, I think that there's this natural kind of Western ignorance that can sometimes happen where we just think, oh, we've helped them get paid, we're done. But it's like, no, that coffee exporter in Kenya uses QuickBooks too. And so how do we make sure that that entire end-to-end flow from payment all the way through to reconciliation is accounted for? And so that's what we're building towards. Certainly not done, but excited about making that entire system come together.
Amazing. So the inherently global build.com, that's extremely exciting. And I think about all of the small kind of commerces and emerging markets are going to benefit from that. It's absolutely huge. So really excited for what's to come. I wanted to switch gear a little bit and maybe start by confessing something. So I feel pretty privileged today that on this panel we have both Bridge and Stripe. So for those of you who don't know, which I think probably nobody in this room, but I'll still mention it, Stripe acquired Bridge last year in a $1.1 billion transaction. At the time, that was the largest, I believe, crypto acquisition. And it was a big turning point, I think, for our industry. It was one of the first time that we saw a real M&A action happening, and the fact that it was around stablecoin and by a large and very trusted payment company, it meant a lot. And so recently, Stripe had the Sessions 2025, which were in the news, really, really, I think, good event, and that got a lot of traction and coverage. During that event, you announced the launch of stablecoin accounts. And one thing that struck everybody was the amount of countries that were launched at the same time. I believe that's what you were mentioning before. We're talking at some point about over 100 countries all at once. And that is something that's pretty rare and I think a really big achievement. So I wanted to ask you first, Jen, what was different from a product perspective with that launch? And if you could share also anything about the Bridge acquisition that potentially made this possible.
Yeah, definitely. It was super, super exciting. The team has been working really hard on that launch. So I'm glad it went well. And I'm glad that people, it seemed like really thought it was cool. I think piggybacking off of what I was talking about earlier, that's where the true manifestation of like global by default really came true and kind of really sold like literally everyone at Stripe from the leadership level all the way to the engineers working on the product on why this was important for us to do. If you think about Stripe in general, historically we've been having to basically go to countries and like enable payment processing for them one by one and have payment processing as the first product that we would have in that country. And with stablecoin financial accounts, that completely turns on its head. So in these 101 countries where this product is accessible, users are able to actually store a stablecoin balance. And obviously, storage is one thing, but they're actually able to fund and send from it in stablecoins over 8 different blockchains, but they're also able to fund and send in US dollars over ACH and Wire and euros over SEPA. So you have this really cool like blended product in which you're able to interact with both the stablecoin rails, but also your global financial rails that these businesses in these countries really would have a lot more difficulty figuring out how to do. And that's all because all of that infrastructure is built on top of Bridge. So it was funny because I think when we initially were ideating about the product, we were kind of like looking for folks who would be able to like provide that service. And then next thing I know, I felt like I woke up the next day and like the announcement came out about the Bridge acquisition. And that's really how quickly it moved. And I think that it's also cool because both companies, I think, were positioned at the right time for that to happen, because the crypto team at Stripe started at the end of 2021, and I was lucky to be there for that. We had built products up until that point, like from 2021 to 2024, which was a very up and down time for crypto in general. And I think through that, and like Patrick and John, who are founders, kind of identified that this is something that we are here for in the long term, made it so we identified the problem. We've seen this, especially with our founders who use Stripe Atlas to incorporate companies in the US, even though they live in Argentina. And we identified that problem as the same time that Bridge actually has this infrastructure ready and like battle tested. And both of them really coming together made the product possible.
Amazing. That's such a cool story. I love to see an acquisition where there is actual real value coming to, customers really fast. That's actually pretty rare. Antonio, turning to you with go-to-market. So since the acquisition, what's been different? How is, I'd say Stripe's maybe merchant network and go-to-market ability kind of like superpowering your own go-to-market ability? What's going to accelerate? What's next?
Yeah, great question. I would say, when Bridge got started a few years ago, our founding team envisioned this world where non-crypto companies would be moving trillions of dollars, right, of like payments between them with consumers, and so that was kind of like the very long-term vision. I think after the Stripe acquisition, being part of Stripe, that future has been pulled forward significantly. I think what we're seeing is an extremely exciting level of like adoption by like enterprises, part of the Stripe network, right? Stripe merchants that are either planning to launch something with stablecoins to solve their money movement problems, whether you're like a large multinational, finding ways to repatriate funds from like places like Argentina or Southeast Asia or Africa, places where the cross-border banking system has been really challenging, even for like a very large company, right? With like tons of resources, it seems to be a problem. And so, you have those types of companies. You have like global payroll companies that wanna enable dollar-based payments to contractors or employees around the world. Even U.S. agencies like looking to send payouts to remote parts of the world. So it's been really energizing to see how Stripe being now like super invested and really committed to the space. Obviously, as Jen mentioned, Bridge is powering infrastructure that allows Stripe to build its products and distribute them to the rest of the world. But also, large enterprises that are now just really, really like have a mission to find how stablecoins can help them and drive their business. And so I think the adoption curve has significantly accelerated. Before, a lot of the adoption, a lot of the activity were mostly driven, I would say, by cutting edge startups and like entrepreneurs, and they've had a lot of success. And now the conversations that we're having at Bridge are very different, right? Like we're talking to traditional companies in different industries, ranging from financial services to payroll to global marketplaces. So I think just being in my seat, I've never been more excited really about the future of this industry. I think it's the stuff that all of us that have been in it for a while have dreamed of, and I cannot wait to kind of show the world all the things that we're working on with some of these companies. So it's been generally a really exciting time since the acquisition. I would say the Bridge business is doing really well, like growing in multiples since then, and just ultimately excited to build together. So.
That's amazing. I agree with you, Antonia. It's such exciting time. And I remember meeting Zach, the founder of Bridge, in 2022 when the company was probably 1 or 2 months old. And I think about 2022 being just 3 years ago. And to me, that's absolutely crazy. I think crypto years in many ways are dog years. This is probably it still feels like it's a long time ago from the perspective of what's happened, but it's amazing to see you joining forces and doing all of these things together. So thanks for being here and sharing with us. And actually, one thing I'd like to now focus on a little bit is the fact that in crypto in general, there's this ethos of, I'd say, having an ecosystem dynamic and building things together. And I'm not saying that that's not true for other industries, but it seems to be a little bit different than how innovation happened in the fintech industry over the past, I'd say, 10 to 15 years. And so I'd love to discuss a little bit with you guys, what's different? Do you guys believe these ecosystems and kind of I'd say networks are going to enable us to go deeper and actually transform the system more in depth? Or are they just another form of, I'd say industry consortia? Maybe I'll start with you, Bryce, because I know that Nuvei is part of USDG. I also think you joined the Circle PayFi network. So you've been a part of some of these very important networks in the industry. Tell us, why did you join them? What matters and what do you think is different?
Yeah, we're kind of taking an approach similar to how Visa does their stuff, their network and networks approach. But we want to be able to support as many options as possible for our merchants and test out different models. So with USDG as an example, this is a stablecoin that was purpose-built for payments and incentivizes its circulation, holding it, minting it in a way that's a little bit different than some of the other stablecoins. We also joined Circle's payment network to support, again, another type of in and out kind of cross-border flows, but also to get access to USYC, which again is a yield-bearing instrument, tokenized money markets, to act on that vision I was mentioning earlier, which is this convergence of capital markets and payment markets. We also support Go Network from BitGo and a handful of other ones, so that if there's a market we want to go into, we don't necessarily need to go get compliance, custody, risk teams in place. We can work with partners who most of the time will have a better product, understand the market better, have better relationships than we would going and hiring entire teams and starting from behind where these companies already are. And I think in general, the crypto ecosystem has been collaborative from the start, and why it's had so much success and network effects that have come out of it is through this willingness to collaborate, sometimes with competitors that are doing the same thing but might be better in one area or another. And we found success in the traditional payment space doing that with alternative payment methods. So we have over 700 around the world, and that's just managing those relationships with the companies that understand the real-time rails and have better access than we might.
Amazing. Anybody else wants to chime in and add something about collaborative nature of the crypto industry?
I'll chime in. Maybe a little bit of contrarian take, but a couple weeks ago, Johnny Ive, did the talk with Patrick at Sessions, and we talked a lot about this idea of how technology, back when they were building Apple and just kind of the ethos, circa 90s, 80s, kind of had this theme around building things that were for the betterment of humanity. And that really stuck with me. And he kind of contrasted that with how nowadays it could almost feel like we're just doing things to, increase revenues and, all the boring business things. I mean, not that they don't matter, but I almost think of that, like in the things that we do and in building these networks, these consortiums, et cetera, are they benefiting our businesses more than they're benefiting the businesses that we serve? And, you take something like USDG, it's really great, in the fact that it can pass back yield to developers, but does that kind of misalign incentives a little bit? Do users actually want it? Do we kind of force custody now that we earn yield, when in reality, this permissionless system should be about letting people kind of decide how they want to hold and store and custody their own assets? I don't know. I guess that's some thoughts.
I love this view. I think to your point, like tying back to mission is very important, especially when we see the very wide range of applications in crypto. I think like making sure that, we all try to like understand where we're contributing in the world and why we're doing things is going to be key in the years to come. Switching gears a little bit, I'd love for some of you to share specific examples and use cases of how you're making a difference for your customers leveraging these PayFi tools, right? I think we're talking about mission. The way to kind of like measure that often is impact. So could any of you share some of the best impact stories and use cases that you've seen in the field?
I can jump in. One use case that I'm really, really excited about is how the remittance model is really shifting. Like if you look at the typical remittance, you're in the US, you're sending $300 to someone in Mexico. The other person in Mexico, 80% of the time, picks it up in a place like a convenience store or something in like cash. And what we're seeing at Bridge every day is how whether new startups creating new remittance companies or even the incumbent remittance companies are seeing this opportunity to rethink the relationship with the receiver. So the receiver in Latin America, right? Like Mexico receives like $60 billion worth of remittances. I think LATAM in general is like more than $100 billion every year. So these are massive amounts, but most of them have been going to cash. What we're seeing with stablecoin rails is for the first time, you can offer a choice to that receiver. You can say, look, maybe 10% or 20% or even maybe all of it, would you like the option to receive it in something like a digital dollar, right? And so before, there's been all these efforts of, kind of digitizing these communities, which in places like Mexico, there's still a large amount of people that are cash-based, right? They haven't had any interest or any strong incentive, I would say, to move over to digital banking, forget about like crypto or stablecoins. But I think for the first time, you have a strong incentive, which is, hey, I have another alternative here. And not only can I just hold this dollar, but you can build a lot of other financial services around it. So things like, hey, here is actually some yield. So like not only are you holding digital dollars, but we can make it easy for you to earn a percentage of interest right every year. And so there's like an additional incentive there, or things like what we announced recently on Bridge with card issuance, right? So you can make those dollars that you're seeing in your wallet, if you're in Mexico or any other place, a lot more useful, right? Like we're still not there yet in terms of wide adoption of making payments with your wallets directly. But here's a solution where you can literally use your stablecoins and spend them in anywhere that accepts a Visa card. And so that really makes this global wallet a lot more useful, right, for the regular person. And so this is very quickly rethinking how this remittance model works, where usually there's no relationship with the receiver. They just collect the cash, and that's it. That's where it ends. Now with all this stablecoin infrastructure and tools around it, you can actually build a much deeper relationship with that receiving person, right? And you can actually offer them a full-on, kind of digital wallet that is useful. So that's where we're seeing a phenomenal amount of of traction and change, and it's not surprising why. I think some estimates say that 10% of remittances to Mexico are now going through stablecoin rails. I wouldn't be surprised if that number is 50% in 3 years. So that's one that I've been really excited to see just from the ground.
Yeah, no, I think that one I feel like that one always hits. And I think related to that, because I think something that you were saying earlier about how, like, as long as you have internet access, like, you should really be able to sell a digital product globally. I actually think that one of the I didn't expect it when we built and shipped the product, but one of the fastest growing verticals for our stablecoin payments products are AI companies. Because essentially, these AI companies who are releasing like SaaS tools, or even just like making access to GPUs a lot easier, are able to sell that regardless of wherever their end customer is. So we have just been seeing like a huge number of these AI startups, and they're small, but they actually do significant volumes for the size that they are. And with stablecoin payments, they're able to get up and running more quickly. They're able to serve all these countries where their users are. They're able to actually like grow. Like, I think the AOV, or the average order value for the typical stablecoin payment transaction, is like 3x what it is normally. And I think for AI companies, it's more, because they're able to have these users pay them for the tools that they're selling. And what I think is really cool is that you think about who's paying them and from where. They might not have, or like it might be difficult for them to get a card. They might have to like actually go create like a US legal entity to open up a US bank account to have access, and pay the usual suspects in the space who have the traditional payment method options. So I feel like it's just really cool to see like a bunch of these startups, like YC companies. Like, we talk a lot about Shadeform, which we got really close with. And I think it's really cool because we're helping them, but also hopefully their customers are able to take advantage of all this cool AI technology from wherever they're building their business at.
That's super cool. I also get very excited about that. Thanks for sharing. I'm actually wondering, because we're talking about kind of like the impact that's possible, what are the kinds of companies, I think building a little bit on what you're saying, Jen, what are the kinds of companies that are adopting this technology, and which ones are still a little bit more timid? Would love to kind of like hear from you guys, like where you've seen most traction and where you've seen most resistance.
Yeah, so we work with a lot of extremely global companies today, and a lot of them are airlines. We do remittance companies, OTAs as well, paying those airlines, like online travel agency type groups. And then we do a lot of high-risk gaming as well, which is starting to become extremely global. And so all of those use cases help them move funds across all the markets they're doing. And today there's a lot of delays. And so a lot of credit is used, or like pseudo credit, to facilitate faster settlements. But when you move it on chain, we can actually start to get 7-day-a-week settlements, or use products like Huma Finance potentially. But I think that's starting to catch on a lot. And also with delivery companies, or like marketplaces where there's these intermediate flows where there's some player in between, and it's taking a long time to get that end merchant their funds. And that becomes amplified in like food industries as an example, where restaurants are extremely cash flow constrained to begin with, and payments could put their business at risk if they're delayed. So those are some like immediate industries that we're already working in, but we're already seeing their interest. Airlines being probably the most hesitant, but the most curious, just because they're already a regulated, like highly regulated industry.
Amazing. Anybody wants to add anything to this? Okay. I think we're coming up on time. So just to close it out, I'll ask you one more question. If you could just choose one word to describe global commerce in, let's say, 5 to 10 years, what would it be?
Just commerce, no global, because it's all one, basically, one network.
Wow, I like that.
I really like the word borderless.
That's a good one.
I like accessible.
Great.
Dang, I was going to say borderless. Oh, no. I mean, I feel like my cop-out, yeah, borderless, global. I think that's really the thing that ties everything all back.
Amazing. Thank you so much, Jen, Bryce, Atikh, Antonio. This was a great conversation. Thanks so much for being here and sharing your insights with us.